Hello everyone, welcome back to the channel. I'm Iggy the Investing Iguana, and today we have a sizzling topic on our hands. Imagine a reason worth $2.6 billion to invest in a stock. Well, that's what we're going to talk about as we delve into the details of DBS Group's recent financial performance. They've reported an 18% jump in their third quarter net profit, and they're not stopping there. They're predicting that next year's profits will follow suit, thanks to the current trend of high interest rates. DBS isn't just making waves with their profits, they're a fortress of financial strength, brimming with cash reserves and a smart, conservative approach. As we look ahead, the bank's income from interest and service fees, especially from wealth management and their credit card business, looks promising. Despite the unpredictable global economic climate, DBS stands strong, backed by Singapore's stable political climate, which continues to attract wealthy investors. With the central bank holding a steady course, DBS seems ready for whatever comes next. So, join me as we uncover the $2.6 billion reason to buy DBS stock and whether this stock could be a valuable addition to your portfolio. If you're keen on financial insights with a bit of fun, make sure to like, subscribe, and stay tuned for more. Now, let's dive in. DBS Group, Singapore's banking giant and a titan in Southeast Asia, delivered some exciting news on a bright Monday morning. They've scored an impressive 18% surge in their profits for the third quarter, much to the delight of financial aficionados. The secret to their success? The rising interest rates have been kind to them, and they're riding this wave of financial fortune with a confident prediction that next year's profits will be just as stellar. Think of DBS as the financial equivalent of a record-breaking athlete, as they're on track for an all-time high annual profit. The top boss, CEO Piyush Gupta, shared this in a presentation that had an air of cautious optimism. He said, "Next year, we'll keep scoring big thanks to the interest rates that keep ticking up." He also assured everyone that DBS is like a fortress, strong and ready for whatever economic surprises come our way, with plenty of cash in the vault and a smart strategy to keep things steady. In the financial equivalent of a winning lottery ticket, the bank's net profit for July to September soared to a whopping 2.63 billion Singapore dollars from 2.24 billion Singapore dollars the previous year. Analysts had their bets on 2.5 billion Singapore dollars, but DBS outdid them all with their record income, boosted not just by those juicy interest margins but also by the fees they earned from their services. Looking ahead to 2024, Gupta is betting on the bank's net interest income to hold strong at this year's levels, and he sees a steady stream of income from services like wealth management and their credit card business. He's also got an eye on profits before they set aside money for potential loan losses, which he predicts will be higher, while expecting the amount of money they need to cover those loans to return to normal levels. DBS isn't just basking in the glow of higher interest rates, they're also the financial hotspot for wealthy individuals who are drawn to Singapore's reputation for stability and security. Yet, even with these strong financial wins in their sails, DBS is staying alert. The global economic scene is as unpredictable as the weather, and while Singapore's own central bank has decided to maintain a steady hand on the financial tiller this April and October, DBS remains vigilant, ready to navigate through whatever economic storms may come. In the heart of Taiwan's bustling financial landscape, DBS has pulled off a remarkable feat on August 12th. They seamlessly brought Citi Taiwan into their fold, catapulting themselves to the top spot as the largest foreign bank in Taiwan by assets. This strategic move wasn't just for show, it supercharged DBS's loan portfolio by an extra 10 billion Singapore dollars and fattened up their deposit pool by 12 billion Singapore dollars. But there's more. DBS Taiwan now boasts a credit card clientele that's 5 times larger than before, with accounts soaring over the 3 million mark. Investment savviness seems to be the new trend, too, as the bank's investment assets under management have tripled, crossing the 12 billion Singapore dollar threshold. Of course, with great mergers come great expenses. DBS noted an additional goodwill of 936 million Singapore dollars on their balance sheets and acknowledged a one-time integration cost of 40 million Singapore dollars for the third quarter of 2023. Now for the good news for shareholders, DBS isn't shy to share its success. With the ink drying on this significant integration, the bank has announced a generous interim dividend of 48 cents for the third quarter of 2023. That's a 33.3% increase from the 36 cents handed out the previous year. If you've been keeping tabs, that adds up to a 9-month dividend of $1.38, which is nearly 28% plumper than the same time last year. But wait, there's a cherry on top. The trailing 12-month dividend stands proudly at $2.30. It's important to note, this includes a special dividend of 50 cents for 2022. Peering into the future, DBS envisions an annualized dividend per share of $1.92. For those eyeing DBS shares, this translates to a forward dividend yield of 5.8%, not too shabby for those looking to grow their wealth with some smart banking moves. Now, let's get into the nitty-gritty of why I, Iggy, believe DBS stock is a pick to consider. First off, that 18% profit surge is no small feat. It's a clear indicator of DBS's ability to capitalize on rising interest rates. This isn't just a one-off spike, it's part of a consistent trend that's expected to keep their profit charts climbing. DBS has shown it's not just floating on a temporary high. The bank is structured to perform well in a variety of economic climates. With a robust balance sheet and a vault full of liquidity, it's prepared for unforeseen events, much like a seasoned captain at the helm of a ship, ready for rough seas. Their financial fortitude is bolstered by a strategy that includes a cushion for loan allowances, suggesting they're not just thriving in the present but are also safeguarding against future risks. Additionally, the bank's diverse income streams are a testament to its strength. Beyond interest, DBS is generating substantial revenue from its wealth management and credit card sectors, which are expected to maintain their momentum into 2024. This diversity not only showcases DBS's adaptability but also its understanding of leveraging different financial services to stay ahead. Moreover, DBS's attractiveness to the affluent, who see Singapore as a bastion of political and economic stability, adds another layer to its appeal. In a world where geopolitical tensions can unsettle markets, DBS's positioning in a stable region is a compelling draw for investors looking for a safe haven. Lastly, DBS's proactive stance in the face of global economic uncertainty is reassuring. While the central bank has kept its policy unchanged, signaling confidence in the country's economic stability, DBS's vigilance means it's unlikely to be caught off guard by market volatility. All these factors combined make DBS a compelling option for those looking to invest in a bank that's not just surviving but thriving amid the ebb and flow of global finance. With its strategic foresight, diverse income streams, and a fortified position in a stable country, DBS presents a potent combination for potential investors. If you found this video helpful, please hit that like button. It really helps us to understand what kind of content you want to see more of. And don't forget to subscribe. Here at the Investing Iguana, we're dedicated to helping you navigate your financial journey with confidence and clarity. And guess what? There's plenty more where this came from. Stay tuned for our upcoming videos, where we'll tackle other interesting financial topics like the best investment strategies, understanding the stock market, and how to make your money work harder for you. As always, we're thrilled to have you as part of our Investing Iguana community. Your support helps us keep producing free content like this. Remember, every like, share, and subscribe goes a long way. Thanks for joining us today. Keep investing, keep growing, and we'll see you in the next video. Bye for now.